Morning, Steve Freed in Chicago with the morning grain comments. Well, it's Friday, and people are wondering now that the USDA report is behind us, where do prices go? And so you look at some of the wire services reports, you look at some of the private analysts' guesses, and the bottom line seems like the soybean prices could leak lower. If you look at the chart, we definitely have rolled over, and we've definitely gone below support. And with the bigger crop in South America, that should compete for U.S. exports. Still, we've got a lot of 2017 weather ahead of us. And so with nearby beans around 10.05, some people think that maybe we could go down and test 990. On the upside though, if we have any bounce because of some logistic issues in Brazil, maybe some better Chinese demand than what we think, or farmer not selling, we might get back to the 1040 area. But probably trading in that range. It is interesting that a year ago, we were down at about the 880 level on this time frame, and we rallied up over $11 because of South American problems. So you might think with more supply this year, eventually we might go back to that 880 level that we started a year ago at this time. For the corn market, May corn right now is sitting at 365. Some people think we're in the 355, maybe 380 trading range. It's hard to get below that 355, 350 area. Farmers stop selling, and we need to fill the pipeline with this record demand, but it's also tough to get higher unless we have some kind of weather problem. A year ago, prices were higher than they are right now, rallied $1 because of the South American weather problems and the fact that we picked up some export demand. So I don't know how much more we need to go down in the corn market until we know more about the U.S. weather situation. Also in the wheat market, we're nearby May wheat's around 442. Some people think we could go down to 410 with the resistance around the 460 area. Just too much wheat in the world. Again, weather's going to probably dominate the trade over the next 2 to 3 months as far as U.S. is concerned. The western half of the hard red winter wheat belt looks dry. We might get some showers for the eastern part, which should help conditions there. Overnight, the Asian, China grain futures were all lower. Malaysian palm oil was also lower because of weak first half March export data, and so that could weigh on the markets in the bean complex also. So all in all, outside of the market, we'll be watching the jobs data. We'll be watching to see how much more selling there might be in U.S. stocks, how much more selling there might be in U.S. bonds in front of the Fed meeting, and we'll also see if we can find some support in the crude oil after recent losses in the last week or so. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.